Hi, everybody. It's Jack. Today is May 22nd, Thursday. I wanted to give you a market update because it's pretty important right now and a trading tip. So first, a market update. I'm looking at SPY. I'm using that ETF to track the S&P 500 to know are we bullish or bearish. And we've got the S&P above all three trend points, so it's bullish. Now, it's closed above all three trend points several days now, and it's even pulled up the short-term trend point into a crossover position. Extremely bullish sign, that is. Extremely bullish. We'll look at DIA. Bullish as well, closing above all three trend points. We don't have a complete crossover yet, so this market is not as bullish as the S&P 500. And we've got QQQ, the tech market. We got a nice crossover here. That's a signal the market's going to go higher. Running into a little trouble here at 521, but it's going to move higher than that. So all three markets are looking real bullish. I mentioned a couple of stocks I really liked that were less than $100, which kind of makes them affordable in this market. One of them's Hood. I really like this one. This one I think is going to go higher. You can buy this one, trade it, sell covered calls against it, credit spreads, naked puts. It's great. And the other one was IBIT. I own Hood and I own IBIT in full disclosure. I also think this is going to go higher. We got a crossover right here. We also saw the Saudis come in with $511 million or more buying IBIT, this exact ETF. So things are looking bright. Now, we also see in a couple of these stocks that it's pretty lofty, right? What I mean by loft is it's got a big spread between that short-term trend point and the price of the stock. And that's happened with a lot of stocks because the market has moved up real fast, right? Real hard, real fast. Kind of like just a little Super Bowl we just had right there. So what you want to do in this market is protect yourself. If you've got something that's up big like this, running up higher, and maybe it goes higher, you put a stop in, okay? You want to stop, sell stop. You want to put that in about 7% below your purchase price. Then you can use a trailing stop that's going to trail the stock higher, and you just set the percentage lower that you want the trailing stop to be, and it'll follow the stock price higher. When the stock price stops going up, that stop loss order will freeze right there, and if the stock comes down and touches it, you'll be locked out with a profit. You'll be sold and taken out with a profit. You'll lock in a profit that way. That's real critical when you got some big ups like we have right now. Stay tuned. I'll have another good tip for you.